Good morning, good afternoon, good evening, everybody. My name is Sean Edwards. I'm the chairman of the ITFA, and I'm one of the hosts of our upcoming Trade and Investment Forum. The first time we've done this on the 9th of March in London at the offices of SMBC Bank International, 100 Liverpool Street. Registration details, please go onto the BCR website. But it's my pleasure to introduce one of the panelists, and actually more importantly than that, the author of the white paper that ITFA published last year, which is really the basis for this whole conference. And this is our white paper on what needs to be done to make sure that funds and non-bank investors can actually start investing in, buying, understanding trade assets. So maybe Swaroop, before I ask you the first question, maybe you can just give us 30 seconds about yourself and what you do.
Thank you, Sean. Thank you for having this. My name is NLN Swaroop. I'm the Global Product Head for Asset Distribution, Sustainability, Innovation, and Financial Institutions at HSBC.
Wow, that's a lot of responsibilities.
Yeah, and I've been with the bank for about 15 years and in varied roles. But this is a subject I've been passionate about, bringing more capital to trade finance and unlocking the real value of trade for the economies around the world.
Yeah, exactly. That is the end purpose of our conference, of the Trade and Investment Forum, to bring in new liquidity, new investors. We know there's a whole bunch of things that we need to solve. Some things we've started to solve, other things we know that we need to do more work on. But as I say, going back to the white paper, can you just tell me a little bit about the background to that paper? It's on trade finance as an asset class. Just give us the background and sort of the key points in the paper that show the opportunity and the challenges, but I think very importantly, the opportunities for new investors.
Yeah, so the background to this paper was very simple. Some of us who have been in the trade finance industry have been wrestling with this problem of getting more capital into it. And we've been looking at various challenges that investors face. And to put it in a nutshell, investors are looking for risk, return, and in today's world, impact, the three big pillars. And trade actually offers value in all three areas. It is very low risk, very low default rates, which is evidenced in ICC trade register reports as well. It offers positive yield, almost in all cases, and it's hugely uncorrelated. It also has huge impact on the economy because it is directly real economy financing and also is very transparent in terms of how the trade finance business operates because it is a transaction-led business, therefore it offers transparency. So really the asset class inherently offers all the characteristics, but still it remains underinvested by non-banks, which is actually the mystery we are trying to solve. And in the process, we discovered several structural reasons why this has not been traditionally invested by others. It's mostly related to the infrastructure and the way the business operates. So the white paper mainly addresses those points. It highlights the structural changes that we need to do in terms of how trade finance business is done, how do we really lend, what is the type of documentation we use, what are the type of structures, and more importantly, what is the language we speak. Trade finance is a business which is primarily led by bankers, and the language is the language of bankers. We need to simplify it for institutional investors and make it investable and accessible. And that's the objective this paper actually addresses. It highlights several areas which could be looked into and has developed a pathway which we want to work on further to make it standardized and digitized.
Great. So some very important points that you've made there about understanding each other. I think also they need to understand, the new investors need to understand us. Very importantly, we need to understand what they want as well. So what would you say are the main milestones in developing these solutions? Specifically at the conference, you're going to be speaking about uniform definitions and data standards. It's more than that, but maybe you'd like to say a little bit about that and about some of the other milestones and some of the things that we're trying to solve for.
Correct. So I would really put them in 5 buckets. The first one being structures. So trade finance is often done in different forms. So there are different types of structures which are used in trade financing industry. We need to make it more uniform and also make it easily understood by investors. So that's the first area, to demystify the various structures and the type of risks it operates. Second is what I mentioned earlier, nomenclature. We need to really standardize the nomenclature we use across different industries. The same thing is called in different ways, different places, different geographies. Documentation is the third big area, which is, again, a lot of work has been done in this area already, including by ITFA. And we need furthermore in standardizing a lot of documentation, actually reducing a lot of physical documentation, and which is the next point, which is digitization of trade, which I'm sure you've been leading some of the work. I've recently seen your video at the House of Lords as well. And lastly, transferring risks. So creating formats which are more friendly on how do we transfer this risk to investors, and how can we fractionalize the transferring of that risk, both in size and type of risks. Those are the things which will really make it. And we are taking a step-by-step approach towards this. So the white paper outlines that the first step here is to create minimum standard practice in the industry of how to do trade finance, and probably creating a guide, and also looking at a legal directory on terminology and nomenclature. So those are the first two steps, and it will further build on data standards and technology areas.
Right. And that's why, of course, we're spending a whole day on talking about all these different areas, because there's no probably one person who can solve all of this, although you, of course, you and your colleagues at HSBC playing a very important part in this. Now, you mentioned, the mechanisms that we can use to distribute these assets to new investors. What do you think those might be? What might they look like? What do we need to do to develop them?
Yeah, so and the paper actually brings out, we actually did a small survey in the paper on this area.
Right.
It brings out very interesting aspects. So majority of investors are not investing in trade because of return. It's actually the uncorrelation and the low default rates is what they are looking for, which offers them diversification. And a lot of them are interested in underwriting these risks, both in a statistical manner and also look at some of the large transactions on single name. So there's no one solution, unfortunately, but there is a opportunity to align the formats with what industry offers. So for example, on the lumpy large value trade finance transactions, there's possibility to look at fixed income type of formats as long as we standardize the procedures. And on the granular portfolios, there's opportunity to use various instruments, be it across traditional securitization like instruments, or looking at some of the insurance structures, which could be used both at a transactional and portfolio level. So there are various formats which could be used, both some of the traditional ones, which are the bilateral master risk participation sort of formats, but there are new formats which could be developed, which could be a hybrid of traditional plus some of the capital market formats. So that's something that is brought out very beautifully in the paper. Investors have actually voiced their opinion of making this more and more simple. And there is a there was a very, very clear opinion expressed on how can we outsource and minimize the number of operational interventions that are required while investing in trade finance, because it's quite a high intensity sort of asset class, and an institutional investor doesn't necessarily want to have that level of friction while investing in trade. So making it more frictionless is the key, and it has to be driven by technology.
Absolutely. I mean, I agree with all of that. There's so many steps that we can do, which the technology allows us to do, but which we have to do, as you put it very well, to make it frictionless and to make it as close to the capital markets as possible. So what are the next? Just to finish off, what do you think are the next steps? So we're having this great event, 9th of March. What are the next steps after that?
So I think the first step was for us to get a group together of like-minded people who believe in developing. I think the immediate next step in this year is for us to start working on the legal directory and the minimum standards guide. which will really set the tone on how industry will move. I think in that area, we would like to pick up one or two specific areas in trade finance, and we think supply chain financing and receivables financing are possibly the two big areas where the impact could be maximum. So we intend to focus on those areas to simplify how institutional investors access those two areas and develop possibly a guide in the legal directory in this year. So that's the real immediate next step. But equally, we are keeping an eye on technology and digitization because that has the ability to accelerate this at a pace which we all cannot imagine. So, for example, the regulation in the UK or some of the other markets, if we are able to digitize, there are immense possibilities. One of the things that has been spoken about is tokenization, for example. Right. If it actually picks up, it has the ability to both offer a new format and also fractionalize risk. So we are keeping an eye on the future while working on the present.
Very, very poetically put, and quite right. There's actually so much on the horizon. Well, all of that plus a lot more we're going to talk about. There are a lot of the solution providers will be there. There's influential people like yourself and your colleagues who are really providing the strategic direction for this under the ITFA umbrella. So, as chair of ITFA, I thank you. We'll end the chat there, but of course, I just remind everybody who's listening in. 9th of March, please go on the BCR website to register. If you are a fund, it is actually free, or non-bank investor, it is actually free to attend. Thank you, Swaroop.
Thank you, Sean.